Good day, ladies and gentlemen. Thank you for watching our previous video on the pay as you earn system. Today, we'll be looking at the small companies and taxes in Nigeria. The comment section is open. You can put your comments, you can like and help us to reshare, as this is going to benefit and be beneficial to many people. So let's go. Today we'll be talking about the small companies and taxes in Nigeria. Like we said in the previous video, that the new tax reform has come to stay, effective from January 1, 2026. We want to see how this new tax reform will affect the small companies and other companies in Nigeria, and how effective it will be in their purse. So as we continue, just stay tuned, watch to the end, subscribe and we share. This also is coming from the stable of CMD Consults Limited. Our phone number is 070-3197-5583. You can reach us, you can write your comments in the comment section or ask your questions, they will be attended to. So now, what is a small company according to the new tax law? We'll be talking about that. We'll be talking about what taxes do small companies pay or not pay, what you still need to do to stay compliant. So follow me as we move on. Okay, according to the new tax reform law, a small company is a business that makes 100 million naira as a revenue or less at the end of the year, or its total fixed assets are 250 million naira or less. That means a small company, now, before, a small company was a company that earns revenue, sales income of 25 million naira in a year. But now the new tax reform has widened the tax base, and a small business is a company or a business that earns 100 million naira revenue. That means 100 million naira income or sales at the end of the year or less, and or it has addition of its total assets equals to 250 million naira or less. It's not a professional service business, that is the law firms and all that, the hospital, they are not categorized as, because they earn more. Okay, so why does this law matter? Number one is small companies enjoy many tax exemptions. In this new tax reform, small companies enjoy many tax exemptions. This new tax reform helps small businesses to grow and survive, compared to the previous tax law, that a lot of taxes are put upon even the small and medium company. Then this new tax law will help you to know your status, helps you to avoid penalties. So now, types of business in Nigeria. According to Corporate Affairs Commission (CAC), every business or company or organization who is carrying out one business activity must register with CAC, Corporate Affairs Commission, on not more than 28 days that you have started. So there are different registration under Corporate Affairs Commission. We have the limited liability, which we simply call company. we have the business name, which is sole proprietor. There are two basic registration under Corporate Affairs Commission. Number one is you register as a limited liability company. That's a company in which the owner is different from the business, and it bears director, it has shareholders, it has person with significant control. And the second type of registration with CAC is a business name, which is maybe ventures. These days with a sole proprietor, that means that business is not different from the owner. You just register that so that you want to keep your name, and it is owned by one person or two. But this type of business affects the tax you pay. The type of registration you made with CAC affects the type of tax you will be exempted, or the type of tax you will be paying in this new tax reform. Now, there are various tax that are existing. There are various taxes that are existing. We have company income tax. Now, company income tax is the tax that is applicable to company. Company income tax is the tax that is charged on the income of a company's profit. And now, in this new tax reform, this company income tax is a 0%, is charged at 0% for small companies. Don't forget that I said at the beginning that a small company, according to the new tax law, is a company that earns a revenue or sales or income of 100 million naira or less, or has a total of 200 million naira as a fixed asset. So a company like that, which is a small company, will be paying a zero company income tax, And a bigger companies, which are companies that earn more than 100 million naira in a year, or their fixed asset is more than 250 million naira in a year, will be paying 25% from 2026. But one thing is certain, even if you're as a small company, even if you are not paying any amount into the FRS, now NRS coffer, you will still have to file your return with NRS, with FRS. Now, what does it mean to file what does it mean to file return with FRS? Now, to file return with FRS means that even though you're not paying money, you will still have to give the details of the income and the details of the expenditure of the company for that year. You will still submit it, and this can only be done through the tax promax. And this is why you need the help of an accountant to help you file a zero return, help you to file details of your income and expenditure statement. And this is why you need to keep your record, the company record, straight. The expenses from the company, the expenses from the company, the income that goes into the company. And this is why you should run your company different from your personal accounts. Now, with the second type of tax is personal income tax. This applies to business names and sole owner. This personal income tax is not different from pay as you earn that we discussed in our last video. Now, personal income tax is applied to as many people that have registered with CAC under a business name. That means a sole proprietor, because it is seen that you are not different from your company. It applies to business names and sole owners. Business names like enterprises, the ventures, the concept, those names registered with Corporate Affairs Commission that don't have limited, that are not limited, this personal income tax is applicable to them. And now, what does this tax say? If you are a business name owner and you earn 800,000 naira or less per year, you earn 800,000 naira or less per year, you will pay a zero tax. And the higher more than 800,000 that you earn, we apply the tax band of pay as you earn. Don't forget that tax band, pay as you earn, that we talked about in the last video. You can go and check it if you've not seen the last video. That means it will start from, if you earn more than 800,000 naira as a business name owner, you will be paying starting from 15%, depending on how much you earn per annum in a year. So it's equivalent to higher income to higher tax. This is why many businesses should register as company. Now, if your capacity cannot carry a business name, a limited liability company as under registration, you can continue with this. But if you feel that you will be earning more, or you're earning more than 800,000, I will advise that you do an upgrade to a limited liability, so that you will be part of the people that enjoy 100 million naira zero CIT. Okay. Then another tax is value added tax. VAT, value added tax, is the tax charged on sales that you make, and this is done monthly. It's a monthly remittance to FRS, now NRS. You only register if small companies do not charge VAT. 7.5% of the sales that you have made in the month, total sales you have made in the month, that's what you remit as VAT. But in this new tax reform, small companies are exempted from tax. Small companies are exempted from tax. They don't pay VAT. Small companies that have been explained in the previous slide. So VAT, small companies exempted from tax. And there are some tax-free, VAT-free, which are basic food items, the rent, the school fees, the medical and hospital services, drug, pharmaceutical, farm inputs, and if you deal with all this, they are VAT-free items. But even though they are VAT-free, any organization that has registered his or her name with Corporate Affairs Commission must file a return of value added tax. Whether you are an NGO, whether you are a limited liability company, whether you are a business name, once you registered with Corporate Affairs Commission, you must file your VAT return monthly on before 21st of every month. 21st of every month, your VAT will be due, and this will be done on Tax Pro Max. You need the help of an accountant to help you, to put you in line. Okay. Then another tax is withholding tax deducted from payment for services. Small companies are exempted. There are no deductions on money you earn, payments you make to suppliers. Other taxes that you don't pay: capital gain tax. As a small company, you don't pay capital gain tax, you don't pay development levy tax, you don't pay withholding tax. And what must you do even if you pay no tax? Number one is you must register your business with Corporate Affairs Commission. Register it, because without it, you cannot open a separate bank account in the name of the company. Get a tax identification number. You need to get your FRS tax identification number, which will be activated. It will be on the CAC, but on the CAC certificate, but it will be activated from FRS office. File your tax returns every year, your company income tax, even when you are not paying. File your tax returns every year. Company income tax, you need to file your returns. File your VAT monthly if applicable. So what are the benefits of compliance? You have financial credibility. You're credible financially. You have business legitimacy. You have access to relief and deduction. You have peace of mind. You avoid penalties and all. Then what are the penalties for non-compliance? We have failure to register is 50,000 naira first month, 25,000 naira subsequent month. Failure to file your return, first month is 100,000 naira, then 50,000 naira subsequent month. Companies hiring unregistered freelancers is 5 million. So what are the key actions for self-employed individuals? Number one, you register with the state tax authority where you are a resident, because you pay your own personal income tax into the state. Then track your income and expenses, obtain valid TIN, keep thorough records to calculate your liability and claim deduction, file your returns on time. Annual filing deadline is March 31 for personal income tax. Then seek advice. Now, and for your business, keep CAC registration updated. Make sure you file your annual returns up to date. The annual returns of CAC is done once in a year, and this is done so as to make CAC to know that you are still in use of your name. It's done once in a year. Make sure they are updated. Make sure your status is active. Register on FRS Tax Pro Max. File your CRT and VAT returns with FRS even when you are tax exempt. Implement digital invoicing for VAT. Review business structure where you think you want to leave business, you want to move up so that you can enjoy the company income tax. You can do an upgrade of your business name to a limited liability. You can register as a limited liability, which gives you room to enjoy more of the tax relief and claim exemption and claim exemption. So thank you for watching this video. Put your comments in the comment section. Help us to subscribe, help us to share. This is from CLMD Consult Limited. You can reach us on email clmdconsult@gmail.com. You can get in touch with us on 07031975583. Thank you. See you in our next video, as we will be talking about the freelancers, the new tax reform, how it affects the freelancers and the people working remotely. Thank you. See you in the next video. Bye.